Over 38,000 people purchased a home here in the Treasure Valley between 2021 and now.
Buyers in our area are losing their homes.
30,000 of those people, or 80% of those people who bought, financed. What if I told you that almost all those people are going to be upside down in their house today? People who buy a house don't always finance 100%. Sometimes they only put 5%, sometimes they put more money than that. What I wanted to just be clear about is here in the Treasure Valley, all the equity that was built up from 2021 to now has almost been wiped out. When I say they're upside down, I mean that from what they bought it for what they can sell it for. The argument that we've heard over the last year and a half, people aren't gonna let go of their 3% interest rate. What you're gonna see is there is a lot of people that are willing to let go of that 3% interest rate that they got in the beginning of 2021. Either something changed in their lifestyle, two, the Treasure Valley wasn't for them, so now they have to sell, and they're selling homes for a loss. Some homes that we look at today are selling for $100,000 less than what they bought it for a year ago. A year and a half ago, people were saying that I'm crazy, this market's the best it's ever been. Now we have agents changing their tune. You know that I say, do not fall for the trap, date the rate, marry the house. And now agents in the Treasure Valley are starting to say, there's a danger if you date the rate and marry the house. I just want to take a moment and talk to my subscribers, those who are not new to this channel, but you haven't seen a video, because some of you have reached out and said, hey, when are you going to do another market update? And I just want to be honest and clear with you guys. Doing these videos is not a fun thing to do. One of the reasons why it's not like the most fun to do is because it opens your eyes to the reality of what our economy is doing, whether it be our local economy here in the Treasure Valley or the whole world economics. And it can be a little bit stressful, right? It can be stressful if we're like, wow, there is a disaster pending, just brewing, getting ready to come. Can create a little bit of anxiety or a lot of things that are not necessarily the most fun to have in your life, especially when you have a wife and kids. When I was running around in the mountains, it was nice. I was able to not think about what's going on in the world. I was able not to think about what was going on here in the real estate market or here in the local economics of the Treasure Valley. But I do have to come back because it is a duty to bring real honest data to you guys. I don't like doing it because, I mean, my wife even the other day was saying, wow, you have a lot more gray hair than you usually do. And my every time I go to the barber, my receding hairline is getting thinner and thinner. When you look at it, it's like, oh crap, what's going on in the world? And it's not the most fun to bring all that stuff and just face that head on. I do believe it's a duty, especially if you hire us, our team, our brokerage, to consult you in the real estate market, that we stay tuned to what's going on. Jump into that article right now. This is from KTV, a local news outlet that interviewed one of these agents and talked about the death trap of dating the rate and marrying the house. Do not date the rate and marry the house. But again, if you've been following our channel, you know that other people have been preaching that pretty much for the last year and a half. Now they're starting to see the light at the end of the tunnel and seeing what we've been talking about. Maybe their clients who reach out to them and said, why did you let me fall for this trap?
In Idaho, some home buyers in our area are losing their homes thanks to an unpredictable market and some bad advice.
Guys, I have been saying this for the last year and a half. And if you move to the Treasure Valley, I hope you listen to us, because now the news articles are saying buyers are losing their house because of the bad advice agents and lenders alike have been giving about date the rate, marry the house. Let's jump back into it and see what they say.
Date the rate and marry the house. Here's how you can protect yourself from that.
How you can protect yourself from that? Like and subscribe to our channel, because we have been talking about this way before it was a trendy topic here in the Treasure Valley.
William and Ashley Kaiser are local realtors who are raising a red flag for home buyers.
It's a...
Guys, listen, I've been raising this red flag for how long? And if you've been watching our channel, you know that we've been saying this. Anyways, let's get back to it.
Date the rate, marry the house, and it is incredibly irresponsible.
The idea is that you buy a home you can barely afford, understanding that the value will go up while the mortgage rates come down. So in a couple of years, you'll refinance, cash out some equity, and lower your payment with a lower rate.
The dangers of dating the rate and marrying the house. If you've been following our channel, this is a little bit redundant, but that's okay. I think it's important that we re-look at this. So in order for you to be able to date the rate and marry the house and then refinance later, one, interest rates have to come down. Keep in mind, People were saying that the interest rates were going to drop of May of 2023. Here we're in the first month, at the end of the first month of the fourth quarter of 2023, and the Fed is actually saying they're going to stay at the course longer, which is pushing the Treasury and the bond market up, forcing the mortgage rates to stay high. On top of that, they're saying they might even hold it high through 2024. This whole refinancing later is getting a little bit further out of reach, especially with our home values dropping. Here in a minute, we're going to get into these homes that people bought a year ago, people bought in 2022 or 2021, and now they're trying to sell it for less than what they bought it for. We also have people that have been trying to sell a house for over a year, guys, over a year, on and off, over a year. Some for up to 15 months, they've been trying to sell a house and they haven't been able to sell. And we're not talking about $1 million, $2 million house. We're talking homes that are sitting right around that $600,000, which again is out of reach when we're talking about 8% interest rates for the local market. And you are forced to look at people that are coming in from out of the area, or they have a lot of equity in the house, but that equity is slowly going away. In order for you to refinance, you have to have positive equity and you have to have enough money in order to either put down for your closing costs. Yes, the lenders will charge you a closing cost fee to refinance. If you don't have that money, you have to be able to roll it into the loan. If that equity is gone, it's a little bit harder for you to refinance. And let's say you are like many consumers out there and took out a HELOC. Again, some people are giving away HELOCs at almost 99% of your home value, 95% of your home value. If you pulled out that HELOC and that's adjustable, right? Adjustable based off of what the Fed fund rate, that directly correlates with the Fed fund rate, goes up and down, and it's adjustable, and you max that out. All of a sudden, the Fed continues to rate hike. When HELOC rates were at 5%, now they're sitting at 8, 10%. So you're doubled the interest rate, and now you don't get a refinance. Be very cautious. Don't fall for the trap. Marry the house, date the rate. Rates were expected to be at 5% by now, and yet they're at 7.5%. So everybody who fell for that trap in 2022 is hurting. So please make sure you share this with somebody that really should be using this information, and follow our channel as we get back into it. Here's a house that is listed at $520,000 or $519,900. They bought it for $500,000 in 2022, a year ago, almost 11 months ago. They've been trying to sell this house for 2 weeks, but I want you to understand they bought this house at $500,000. Now, I don't know what kind of financing they got. I don't know if they used a good credit second. But what's very fascinating about this is when you add in the closing costs. So let's say this agent is charging them 4% because there's not a set rate. So let's just say maybe this agent is charging them 4% for listing their house. They're barely breaking even, actually going a little bit negative if they were to sell it at $520. It's been sitting on the market and it could maybe sell for less than that. We obviously don't know because it's been on the market for 2 weeks. This house right here, this one is very fascinating to me because they have it listed at $589,000. And when I went back into the history, what I saw is they bought it, or there was a warranty deed, and there was closed at $680,000. They started to list it back in May of 2023 at $725,000. We are sitting now, and it is October 31st for the time of this video, and the list price is $589,000. So we're talking about $135,000 decrease in about 6 months, 5 to 6 months. They bought this house for $680,000. That is insane, guys. Like, they're willing to take almost $100,000 loss. Why? I don't know why, but I just want to bring up these prices. And guys, they bought this house in 2021. A lot of you guys have asked me, Josh, when are we going to go back to the pre-pandemic levels in the Treasure Valley market? Keep in mind, in 2020, there was a rise, increase in the median sales price by 27% in Ada County and about 23%. So let's just average that out. 25% increase in home values in 2020. Now we're seeing home prices being sold for less than what they were bought for in 2021. So we are on the downward trajectory to get back to those 2020 values, but we still have about 25% to go, give or take, obviously. Going back to this house, they bought it for $680,000. Do you guys remember what I said the list price was? Their list price is $590,000. A year and a half later, they're willing to take a $90,000 loss, $100,000 loss really when you calculate closing costs and other things that it costs to sell a house. Do you think date the rate, marry the house is a dangerous idea? Absolutely. This is another prime example of somebody who bought a house, but circumstances have changed and now they're willing to sell it for less than what they bought it for. It's currently listed at $750,000. Now, if we go to see how much they bought it for, they bought it for $795,000. And that was at the the middle of 2021. Now they have it listed at $750,000 and they still can't sell it. So they have it listed for less than what they bought it for, and it still hasn't sold. It's been on the market for 2 weeks. Guys, these are prime examples of not like if you were to marry the house and date the rate, the home equity has to be in it in order for you to refinance. But time and time again, I've showed you just through this that there isn't the equity in the homes for those who have bought. Those 30,000 people that have bought in 2021 all the way till now are in a position that could mean they can't refinance. And if they did anything else or some circumstances happen, they are on the brink of something disastrous getting ready to happen.